A wonderful good morning, ladies and gentlemen, and welcome to NAGA and Markets for Breakfast. Today is Friday. It is December the 6th, 2019. In Germany, it's called Nikolaus. I don't even know if it exists in English, but many kids will wake up today in Germany and find some little bit of a present in their shoes today. And yeah, do the markets have a present for us as well this morning? Well, that's something we want to go through together here and prepare ourselves because today is also the first Friday of the month, which typically is the NFP Friday. It's all about the American employment numbers today that could very much influence markets heavily, especially given that we have seen some major dollar weakness all throughout the week. You can see the dollar index, how much it has dropped over the course of this week, and we can clearly see that there is a weakness in the US dollar. But a weakness against what exactly? And that's something we want to have a look at. First of all, let me open up the markets here and. There are a few narratives in the market that continue to be predominant, really. First of all, it is, in the currency sector, there's some outperformance. The outperformance in the currency sector remain to be the pound and also the New Zealand dollar. And we talked about the reasons for that, and these reasons have not really changed so far. So let's have a look at, let's start with the Kiwi, maybe even the Kiwi against the Euro. As you can see, even though the Euro got stronger against the US dollar, and we're here and right at that 111 level. Remember the 111 that we haven't been able to really break through yet, but we're right there in the hopes of the NFPs coming, allowing the euro to really pierce through it, but one step at a time. But even against that, let's just say not weak euro, the Kiwi has seen a lot of upside, and that is definitely a development that could continue further. And here we have the Kiwi dollar, and in New Zealand, the situation remains to be that further price or further rate cuts that were expected to happen have been priced out, and we're now trading at the 65 level, or 0.6560, and let's open the daily chart so we can see a little bit. So we're still stuck in that range here, and there is upside potential. So we could see the market go all the way up, even break out here. Even though I have to say this does not look all too correct to me. That's the 64, and here it's showing 65. So we're seeing a different price on a different chart. That is definitely not correct. So let's stick with the 30-minute then. I'll have to send that here to our support and let them know that for me at least I had that issue. So anyway, so we have the 65, and that's been really, the 65.60. You can see that it has been doing really, really well. And chances are, if we get a weaker NFP number today, that the Kiwi may actually go further, even though it has gone already so far, because there have been significant changes in New Zealand. First of all, is that the central bank, the RBNZ, they have increased the needs for capital ratios for banks, and large banks will have to hold now 18% in total capital and 16 in tier 1, and presently they only need to do 10.5. So that is a big difference, and that is going to make New Zealand a safer marketplace and the banks more healthy. Maybe it will reduce the bank's bottom line, but eventually it's helpful to prop up the New Zealand market. And that also, given still the hopes of that there will be some sort of a resolution between the US and China, is helping the Kiwi further outwards. And that is an important resistance here. As you can see, yesterday we were not able to get above that level, and we're already retesting it now. And we could in fact see this level break, especially should the US dollar show further signs of weakness today. And speaking about the US dollar, so obviously the US dollar has a lot to do also with the trade war going on, and we are quite cryptic in terms of what to expect because Donald Trump keeps saying, it's like when he says when he tweets about the stock market all the time, and then when he's asked on a bad day for the stock market, he just he just answers, I don't watch the stock market. Like, okay, but you tweet about it like almost every other day. No, 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 I don't watch the stock markets. I watch jobs. Well, okay, today is the jobs day. Today, and let's open up the calendar here, is a day for jobs. So let's see, Mr. President, if you are going to look at jobs, I guess. And what we've seen yesterday out of the US is that there isn't necessarily a positive development in terms of numbers here. So what we can see is that even though the actual number here is that we can see that exports have dropped from 207.55 to 207.12. You can see that. And imports have also dropped from 258.60 to 245.30. So you can see that both numbers have contracted, imports and exports. And is that a sign of an expansionary growing economy? I would not say so, because that is why, because both are actually going down. So that's not necessarily a good sign of the U.S. economy's health. And we can argue a lot about it because stock markets continue to go up and up and up. And let's have a look at the S&P 500 here. 1 second. Let's just see if we have that price issue actually across all the assets. So 3,124. You can see that the S&P has made back a lot of its declines and is now stuck at the level, the correction level after the first decline. Now on a daily basis, and you can see that at least the price on the daily here is correct, is that you can see that this was a resistance level before here, before we had that another big blowout to the upside here. So that is likely also a level that is very much influenced by today's NFP result. And by the way, we are going to cover, two of my dear colleagues are covering the NFP result with a webinar right live when it's happening. So make sure you join that one. By the way, you can even we're having a little guessing game here about what's going to be the NFP result. And whoever gets to guess the right number can win 500 NAGA coins. So I think that's a very cool thing here, in fact. And I look forward to really witness these NFPs today and also follow my colleagues' webinars. Maybe the next time I'll also join or something like that. We'll figure that one out as time comes. But I'm quite positive about that today could really be a mover because a lot of the environment and the circumstances that are right now building up, they need some sort of a trigger, a release, whatever, something like that. And the NFP today could be just that. So, but looking a little bit back at economic data. So first of all, stock markets continue to be high. And Bloomberg has an article here saying like one of the things that we think is primarily responsible for the buoying risk assets this year is the giant amount of liquidity that the Fed has injected into markets. The problem is, what if they stop? And that's a big question. That's not just relevant for the US, it's relevant for the whole financial system globally. And that is really a question nobody can answer. And it looks like central banks continue to need to push liquidity into the markets. Also, what we can see here in the repo markets in the US is that they continue to eat up all liquidity the Fed is injecting into them. And we also have here Bianco research from MarketWatch saying the big picture answer is that the repo market is broken. They are essentially medicating the market into submission, but this is not a long-term solution. So again, no long-term solution with buying everything or giving liquidity, no long-term solution with giving liquidity to the repo market, but none of this is really giving a rest without the medication, I suppose. So, really, the question is, can these markets sustain their levels? And while, for example, consumer spending is going down, and again, consumer spending is a lagging indicator. So, business cycles are driven by investment in housing and business. By the time consumer spending begins to weaken, it is too late, right? Because they are the last one in the chain, the consumers. But still, consumer spending is going down, clearly going down. Yes, we had a trend like that happening before, but the recovery weren't that good, and we're still almost at the lowest spending in a couple years. So that is not really positive. And on top, all this talk about the stock market in terms of being a sign of U.S. economic health, I suppose, and people being having good lives. Well, no. A poll of likely voters found that 61% Americans said stock market movements had little or no effect on their financial well-being. So you can see that all of that is a big, big, big play here, and nothing is really looking all too well. And that's a story that's going to probably have more impact and issues over the course of the coming year or a few years, is that it says nearly 40% of Facebook's valuation is on the line from regulatory risk, right? And you know that France started with the digital tax on, because these digital companies, they don't pay any taxes in Europe, more or less, Amazon, Facebook, and Google. So they're very smartly set up in a corporate way that they don't pay taxes so much. And that is just the tax side. The regulatory side, probably you may have heard the speech of Sacha Baron Cohen. It's like 2 weeks or 3 weeks ago. It's a comedian, the guy. You probably know him from Borat, but he's also saying quite legit things in terms of why these social media platforms will need to see some sort of a regulatory impact, and that could really hurt them, and I'm not saying this is going to happen today, but that is something you need to keep in mind as to why the long-term outlook to stock markets or to a possible correction in a stock market becomes more and more relevant, more true, and it's not just the US. So here we have Germany, major dent. German industry took a big hit in 2019. So make no mistake, this is from the Bundesbank, the German Bundesbank. We have not seen something like that. So yes, we see a little bit of coming, like less strong of a slump. That's right. But really, we're not out of the woods here by any means. And yesterday, or actually no, this morning, I posted also on my news feed. Maybe I can see it here. Just give it one more second. Here, the gap between the German GDP and the price of the DAX is actually there's a big a huge gap is what I'm trying to say. You see, it almost takes away my language skills. So the question is the DAX overvalued? No, this is the DAX index, and these are the GDP forecasts that are dropping like they're hot. And really, the DAX continues to be quite high. So many issues point to a possible corrections ahead. And today might be a little bit more of a mosaic in terms of whether the U.S.'s health in the employment market is really there. So the expectations are, the headline number is 148,000, and 128 is what we had the last time. So usually from seasonal factors, right, it's Christmas coming and everything, you could expect that there will be more jobs created. But these are seasonal jobs, and that's why you need to pay also attention to the average hourly earnings. Let me open the calendar here so that you can have a look at what I mean. So there are a couple components actually today. So we have the non-farm payrolls, which is shown as the headline figure here, right? And then we have the average hourly earnings, and they're not shown as important here, but they are because that tells you how much are these jobs really impacting inflation. And that's really an important thing, because if all these jobs created were low wage jobs, okay, I'm not going to name the jobs now because that sounds a little bit offending, but anyway, so low paying jobs, how much are people that are making low wages impact an economy with their consumer spending and actually have an impact on inflation? typically not too much, and that's why that is important. So if we have more jobs but the hourly earnings go down, that is not a positive sign for the US dollar, and that's likely then also to impact. Maybe we can see then the US dollar spike up on a positive headline, but then if they realize, okay, the average hourly earnings component is negative, then it actually usually comes back down quite quickly. So these are things probably my colleagues are going to explain to you as well. NFP is always quite an interesting time, and even today is one of those NFP days where we also have employment change out of Canada. And the Canadian dollar has been one other currency that has been showing pretty much strength this week. And here we have the dollar CAD. Let's open it up. So we had the Bank of Canada, right? And you can see, boom, it dropped a lot more here, the dollar versus the Canadian dollar, meaning the Canadian dollar got stronger. And the Bank of Canada on Wednesday has brought buyers back to the table, by saying that they were a lot less dovish than the market expected. Maybe you don't know the terms. Like dovish is when a bank is accommodative, meaning they increase the monetary flow, they reduce and cut rates and stuff like that. That is called dovish, like the bird, a dove. And the other side is called hawkish. Hawkish means when you tighten the monetary supply, when you increase interest rates. That's something no central bank is doing right now. But in the recent years, the Federal Reserve was increasing interest rates and cutting or reducing the QE program. These measures were hawkish, meaning hawk, like also the birds. Like for some reason, these are the two words. Like bull and bear, there's doves and hawks. And the central bank in Canada was less dovish than expected, and that has pushed the Canadian dollar up, because the expansionary or the expectation of the BOC, as it's called, Bank of Canada, to cut rates further was reduced, and that has helped a lot. And then the unemployment also or the employment figure today could give it another leg. So let's assume we get a weaker reading out of the NFPs and a stronger reading out of Canada. And these things happen all the time, so you can research them. Just open up the calendar and look at the last releases for both, and you can see that this can happen. And then the dollar CAD can be a lovely moving instrument over the NFP, because both markets report their employment figures at the same time. So that's definitely something to consider today as well, especially given that the Canadian dollar has a run already, so it has an edge. And if we get this edge supported by employment figures, then we can see really more push to the downside here. What else do we have? We do see that there's still more hope than fear in the market for that trade deal to happen. So next week, in any case, it's going to be a very important week. Why so? Because one way or another, the tariffs to kick in were December 15th. So that's not this Sunday, but next week's Sunday. And that means that the coming week is that week where we need to see some sort of resolution. It's going to be either they agree to something, maybe they postpone it because there's so nice people that are having these conversations and they're making so much progress, or they're not. And if we go into next weekend with no development, then that is a development. It's like they say, no answer is also an answer. And that is why the next week is so important. And right now you can see that gold has contracted further, so it's still holding quite well in the 1470s. And you can see on the 30-minute time frame, we're holding at that recent low around the 4071.50 level here. But you can see that it did not advance further. So there are expectations of a trade deal, even though, and that's kind of my job to even bring the even those here. The overall relationship is not getting much better. So Hu Jin is tweeting here, I have verified that in response to U.S. restrictions on Chinese diplomats, China requests U.S. diplomats in China to submit a written notice 5 working days in advance before their formal meeting with Chinese local government officials and formal visit to educational and research institutes. So basically what the U.S. is doing is saying, hey, if Chinese diplomats in the US are meeting with anything relevant to us, like, educational research, or formal, then we want to know about it. And now China's playing the ball back. So you can see that these two lovely, I almost said ladies, but they're not ladies, obviously, China and the US. But these two lovely countries are not really showing affection too much for each other. Does that impact the trade deal conversation? Well, probably, but at the end of the day, they try to keep it objective, and the farm purchases remain to be the big thing, is what the Wall Street Journal reports, that the negotiations are very much on track for a deal, but they have discrepancies on the quantity of the farm purchases, and Trump wants 40 to 50 billion, and China just bought last year, just to put it in perspective, 8.6 billion. So Trump wants them to basically quadruple that number or more. And China has a little bit of an issue that a lot of the pork they have was actually dying because of the swine flu. So what the heck are they going to do with 50 billion worth of farm purchases? So it's a tricky one. Let's see where the agreement's going to come out at the end of the day, but that's likely to have pretty much of an impact here as well. So keep that story also on your radar. And looking at another commodity, for example, oil, what we see is that, here we go. Here's the oil price. It's holding at the 58 level, after dropping and then coming up back again after Saudi Arabia said, yeah, we increased the supply, and then, no, we're going to agree and whatever. So back and forth. That OPEC meeting has not yielded a uniform type of response just yet. So the meeting ended with no clarity. So will there be output cuts? Will they be extended until June or not? We don't know. So what we know is that the ministerial panel recommends an output cut until June. And there's also some other sources saying that the OPEC deal is for a cut of 500,000 barrels per day with Russia. So we need to see if there is really going to be deeper cuts into production, and if they're actually going to do it. Because remember, that was a story about Russia saying, like, we don't want to do this anymore, and Saudi Arabia saying, like, we don't want to overcut any longer to make up for others who are not cutting. So let's see what's going to happen. But the OPEC did say that we cannot say we have an agreement until we meet non-OPEC members. So it's all about now what's going to happen between Russia and the OPEC. And the minister also added yesterday, you will hear beautiful news tomorrow. So that would be today. So let's see if those beautiful news are going to be an agreement, if they're really going to make it. That could prop up the price of oil, even though the overall outlook globally remains rather dim as to, global economy is not really developing well globally. That's just something that is reality here. So that's my overview for most of the market. So really it's all about looking at the NFP number out of the US today, combine it maybe with the Canadian number, because yesterday also we had good data out of Canada. It was not just the Bank of Canada itself, but also the IV, where is it? Friday, here we go. Canadian here. The IV PMI came in also strong at 60, very strong reading. So Canada has a good chance to really ascend further from here. And what we need today is basically a strong Canadian number, and that could really, really help. So that is where my main focus for today lies at. Looking maybe one more time also in the land of crypto, is that we see is that Bitcoin is not really giving up. We're still holding at pretty much the same levels, somewhere in the middle of the lower 7,000s. We're not seeing huge attempts to the downside like we saw here all the time anymore, which is good. So it looks like we're seeing a little bit of a tiny, stabilization around these levels here. those are still on rather the upper end of this trading range that we had at the very beginning of this week. So chances are, if we stay above the 7.3, that we could retest 7.4, 7.5, 7.6, maybe even a little bit slower than before, and then there might be a bigger chance for it to hold. But right now, there's no really big news here that could move the market in an instance one way or another. So if you're waiting for that, then probably we'll have to wait and see for real news to break. And until then, it seems that it's pretty much comfortable around these levels here, the 7,000, which at least is not so bad at all. It's a good median for the whole year if you think about it. So again, that's my overview of the markets this morning. As always, thank you very much for listening in. I wish you a great, successful trading day. Come and join our special webinar over the NFP. I'll definitely be excited about it myself. And I will be back here on Monday morning. Bye-bye.